Recently, Tesla stock has skyrocketed as more and more investors start to recognize the long-term growth potential of Tesla. However, Apple and Google actually recognized this potential 7 years ago when they both tried to buy out Tesla. But clearly, these deals did not go through. So why did the deals fall through, and what may have happened if Apple or Google succeeded in acquiring Tesla? Well, starting off, 2013 was a high growth year for Tesla, just like this year. They started the year off at just $35 a share and skyrocketed, peaking at $193 a share. Of course, this was before the recent 5-to-1 stock split, meaning that in today's share prices, Tesla started 2013 at $7 and grew to $38.60. As a result, Apple's bid of $240 a share, or $48 today, was not a lowball offer by any means. In fact, it respected the recent 5x run-up and even offered 20 to 25% more. The long-term investors would obviously not be happy with this buyout, as they likely didn't want to sell out for a 20% premium. Nonetheless, the offer itself was quite fair. But then, why did the deal not go through? Well, Apple had one fatal contingency with their offer. Apple insisted that Elon Musk had to step away from day-to-day operations. And that obviously was not going to work with Elon Musk. But it wasn't just Apple who tried to buy Tesla. Google also considered buying the electric car manufacturer earlier that year before the run-up. In March of 2013, Elon Musk met with Google co-founder and then CEO Larry Page. Elon Musk was looking for Google to buy Tesla for $6 billion in cash, along with a commitment to invest $5 billion into building factories as needed. This comes out to a per-share price of about $32, so quite a bit lower than the offer from Apple, but this was before the run-up. As for the $5 billion factory investment, we can't include this into the purchase price, as Apple would have more than likely funded such ventures as well. The deal with Google also included a contingency that Elon Musk could continue running the company for at least 8 more years, or until the Model 3 was released. Larry Page didn't mind Elon running the company, and we know that Google has been very interested in the car space for over a decade now, so Google didn't really have any objections to the deal. At this point, Tesla only had enough money to sustain their losses for 2 more weeks, so the situation was quite critical. However, the potential for a deal quickly died out after the first quarter of 2013, when Tesla was able to squeeze out its very first profit in history. It wasn't a very big profit, as it clocked in at just $11 million. However, this was enough to boost investor confidence and the 2013 run-up, which enabled Tesla to pay down their excessive loan balance, making them no longer a bankruptcy risk. Considering this, it's no wonder why Tesla rejected Apple's offer later that year. Today, we know that Tesla came out alright. Even though they're still not strongly profitable, they are at the very least sustainable. But this wasn't always the case, as Tesla came quite close to bankruptcy in 2018 as well, after the Model 3 production ramp. So what would have happened instead if the deal with Apple actually went through and Apple bought Tesla in 2013? Well, the companies are not all that different in terms of their customer base. Both Apple and Tesla have raging fans that cheer on every product release and fill up their pre-order books within days. Similarly, both Tesla and Apple have quite similar design language, focusing on minimalism and function. However, the first glaring difference between the two companies is quality control. Tesla has struggled with quality control for years at this point. You'll often find unpainted sections of the car and sometimes even find disconnected rear seats. This was even the case with the recent Model Y. Apple has also had their own share of quality control issues with bent iPad chassis and unreliable MacBook keyboards. But Apple is by no means infamous for quality control issues like Tesla, and thus this would be one of the first issues they address. But how do you accomplish this? Well, the straightforward answer would be scaling down production. And Apple would have no problem scaling down Tesla, and they probably wouldn't even release the Model 3, at least not at $35,000. The thing is, Apple has never cared about market share or beating competitors in terms of market share. As Steve Jobs has said,
"Our goal is to make the best personal computers in the world and to make products we are proud to sell and would recommend to our family and friends."
And I think we'd all agree that disconnected rear seats are not something to be proud of. Tim Cook recently reaffirmed that Apple still believes in this notion.
Our goal is the best, not the most.
Consequently, Apple doesn't have a dominant position in any of the marketplaces or sectors in which they conduct business. Considering this, it's pretty safe to assume that they wouldn't change this philosophy when it comes to running Tesla. Elon Musk has run Tesla in the hopes of accelerating the global transition into sustainable energy. Apple, on the other hand, would have turned Tesla into a highly profitable niche player. In this reality, the Model S would have likely been their main product indefinitely. They likely would have eventually come out with the Model 3, but it would likely come in at around $50,000. Also, they wouldn't pitch the car very hard. The Model 3 would have likely been treated like the iPhone 5C or the recent iPhone SE. Meanwhile, they would push towards coming out with the more futuristic Model S and Roadster, and this would be where most of their efforts lay. Aside from this, Apple is very involved in the software side, so they would no doubt push forward on the autonomy side as well. However, they would likely not release all of these beta updates and test software like Tesla does. They wouldn't release each feature until the feature is basically flawless. After all, one of Apple's most famous mottos is, "It just works." With that being said, we would likely see a much more relaxed time frame for full self-driving, and we wouldn't see any autonomous capability until it was perfect. Apple does have a lot of money, so it's not like they would be in any rush to push out such software or any vehicle models anyways. On the bright side, Tesla likely would have never been in danger of bankruptcy, as Apple would just endlessly fund them as long as they still believe in the company's future. So that's likely the path we would have seen Apple take with Tesla. However, despite the deal not going through, Apple did not give up on the automotive space. Right after the deal fell through, Apple started working on Project Titan in 2014 with upwards of 1,000 employees. The goal of the project was originally to develop an EV. However, it seems like they have since transitioned into just focusing on autonomous driving software. Despite this, many analysts still believe that Apple will come out with their own electric vehicle between 2023 and 2025, so we'll just have to wait and see. And as for if Tesla went with Google, well, Google is no stranger to running unprofitable companies. Most of their services are wildly unprofitable, including YouTube, which has bled billions during its lifetime. Unlike Apple, Google's plan is to offer as many services and products for no profit or even a loss in order to get as many people as possible onto the Google ecosystem. At this point, they profit from people using their main service, Google.com. As a result, if Google had bought Tesla, we would likely see Google go along with Tesla's plan to consistently launch cheaper and cheaper cars using knowledge and profits from their previous vehicles. On top of this, Google has some of the best software and artificial intelligence engineers in the world, just like Apple. Thus, Google would likely transfer a solid portion of their IT team to work on full self-driving, and with Google's vast resources and similar vision, Tesla would have likely been able to pump out fully self-driving cars as well as cheaper electric cars even sooner. As this didn't happen, however, Google has just stuck to their own autonomous car company, Waymo. But really, at the end of the day, aside from the hiccup in 2018, Tesla has been progressing quite rapidly anyways, so it wasn't that big of a deal that they didn't complete a deal with one of the tech giants. For Apple and Google, however, being able to add Tesla into their portfolio would have been quite beneficial, as it would have likely added hundreds of billions onto their already monster market caps. Nonetheless, Google and Apple are doing better than ever before as well, so I don't think they're really complaining about it either. Do you guys think Tesla would have been better off or worse off if Apple or Google had acquired them? Comment that down below. Also, drop a like if you guys think Tesla is just getting started, and of course, consider subscribing to see more questions logically answered. But until then, I'm Hari, and I'll see you guys on the next one.